Welcome back to the channel. Monday, January 5th, 2026 marks the first full trading week of the new year. And while most traders came into today watching big tech or waiting on macro data, a small cap stock quietly stole the spotlight. Strive Inc., trading on the NASDAQ under the ticker ASST, came out of the gate with strong momentum and immediately caught market attention. As the session got underway, ASST pushed up near the 95-cent level, posting a solid double-digit intraday gain on rising volume. Moves like this on a Monday morning are unusual, especially when there is no breaking headline dominating the news cycle. That's exactly why today's action matters. This wasn't a hype-driven spike. This was the market reacting to new information. Earlier today, Strive released preliminary year-end figures outlining its Bitcoin holdings and updated equity positioning. At first glance, this might sound like just another balance sheet update, but once investors dug into the numbers, the reaction made a lot more sense. The real shock was the scale of Bitcoin accumulation. During the fourth quarter alone, Strive reported purchasing more than 1,741 Bitcoin at an average cost of roughly $103,000 per coin. For a company trading under $1 per share, that is an extremely aggressive Treasury strategy. This instantly changes how the stock is viewed. Instead of being seen purely as a niche asset manager, Strive is now being priced as something closer to a Bitcoin proxy. The market is asking a simple but powerful question. Is this still a traditional financial firm, or is it becoming a leveraged vehicle tied directly to Bitcoin's price movements? Based on today's trading behavior, investors appear to be leaning toward the second option. The valuation response suggests that market participants are starting to focus less on earnings multiples and more on asset exposure. Historically, Strive has been best known for its stance against ESG mandates and its promotion of what it calls excellence capitalism. For years, that positioned the company as controversial and, in some circles, political. Many investors ignored the stock altogether because of that branding. But what's happening now is something very different. Through a series of mergers and restructurings, Strive has quietly transformed its business model. It now operates as a hybrid. On one side, it generates recurring revenue through ETFs and managed investment products. On the other, it actively deploys capital into Bitcoin using its balance sheet. This is not how traditional firms like Fidelity or Schwab operate. Those giants emphasize diversification and risk control. Strive is taking a concentrated, high-conviction approach. That choice brings volatility, but it also brings leverage. And leverage is exactly what attracts both momentum traders and institutional capital. Trading volume today confirms that interest is accelerating. Compared to the quiet holiday sessions at the end of December, activity has surged. Even more important is who is involved. Recent filings show increased exposure from large institutional firms such as Citadel Advisors and Jane Street. These are not retail momentum players. When firms like this take positions in a sub-dollar stock, it usually signals a perceived valuation mismatch rather than a short-term trade. They are likely comparing Strive's current market capitalization to the value of its growing Bitcoin treasury and seeing a gap. That gap is what the market may be trying to close today. Still, it's important to keep perspective. AST is no stranger to extreme volatility. Over the past year, the stock has traded from the high 30-cent range to well into double digits. That kind of range tells you everything you need to know about risk. For investors who bought near the highs, today's move feels small. For those who accumulated near the lows, the rebound has been meaningful. One of the biggest concerns hanging over the stock has been dilution. Strive recently announced a large preferred stock offering program with the potential to raise hundreds of millions of dollars. For a company with a market cap under $1 billion, that's a red flag for many investors. Dilution fears alone can cap rallies and pressure prices. However, supporters of the strategy argue that this capital is not being wasted. Instead, it is being used to acquire Bitcoin, an asset many believe is still early in a long-term cycle. In that sense, dilution is being exchanged for asset exposure. Whether that trade-off is worth it depends entirely on Bitcoin's performance going forward. Beyond the Bitcoin headlines, Strive remains an operating business. Based in Dallas, the company functions as an investment advisor managing multiple ETFs. It earns fee-based revenue similar to traditional wealth management firms. The recent merger also added a technology and community engagement layer, blending finance with digital platforms and online investor communities. It's an unusual mix, but one designed to attract modern capital flows. Financially, the picture is mixed, as you would expect from a small-cap company in transition. On the positive side, Strive maintains relatively low debt compared to equity and holds more short-term assets than long-term liabilities. That provides flexibility and reduces immediate balance sheet risk. On the negative side, the company continues to burn cash and report negative net income. That's why preferred offerings and elevated dividend payouts are necessary to attract capital. At its core, AST behaves like a leveraged bet on Bitcoin. When Bitcoin rises, AST tends to rise faster. When Bitcoin pulls back, the downside is often amplified. This relationship is why the stock frequently trades alongside crypto-related names on platforms like Robinhood and Interactive Brokers. That categorization is a double-edged sword. It attracts momentum traders during rallies, but it also leads to sharp sell-offs when crypto sentiment turns negative. Institutional investors appear comfortable with this volatility. Retail investors need to be honest with themselves about whether they can handle it. Regulation also plays a role in the long-term outlook. If institutions are eventually allowed broad, direct access to crypto across retirement accounts and traditional funds, the need for proxy stocks like ASST could decline. However, as of now, Strive remains one of the few ways investors can gain Bitcoin exposure through conventional brokerage and IRA structures. That unique positioning still carries value. Looking ahead, one of the most important near-term catalysts is the January 13th merger vote. Proxy advisory firms have already recommended approval. If the deal closes smoothly, it could further expand the Bitcoin Treasury and strengthen Strive's niche positioning. A successful outcome could also help push the stock out of penny stock territory and back toward levels seen earlier in its trading history. Today's price action represents more than just a green candle. It marks a shift in narrative. What was once viewed primarily as a political or ideological investment has evolved into a complex financial vehicle. Strive is now using mergers, preferred offerings, and aggressive asset accumulation to build leverage in a way few small-cap companies attempt. The central tension remains clear. On one side, the company reports ongoing operating losses. On the other, it holds a rapidly expanding Bitcoin treasury. How that tension resolves will define ASST's performance throughout 2026. Whether investors agree with the philosophy or the strategy, one thing is undeniable. Strive is not waiting for the market.